Yeah, meantime, hotel industry is still pretty bullish and looking to keep up with demand. Hilton opening its 1,000th hotel globally, hoping to open 3 new luxury and lifestyle hotels per week. Joining us here at Post 9 is Hilton Worldwide CEO Chris Nassetta. Welcome. It's good to have you.
Great to be here, Carl. Nice to be with you.
So what are you seeing in demand?
Well, let's talk about growth, because you started with a comment on growth. You know, we had an extraordinary year. I think I was here and talked about it sometime in the last year. Last year, best year ever, opened 100,000 new rooms in the world. We're going to have a really, really good year again this year in growth. We're going to sign more new deals than we ever have in our history. We're going to start more under construction. We're going to open in the world 2 hotels a day, plus or minus, this year, 6 or 7% unit growth. And as you noted, a big chunk of that is in the lifestyle space. We opened luxury and lifestyle. We opened our 1,000th hotel. We have 500 in the pipeline. We're going to open 3 of those of luxury and lifestyle hotels a week. So lots of incredible momentum on the growth side. I mean, there's obviously a lot going on in the broader macro environment and geopolitical environment.
That's not holding you back.
It's not holding us back from a growth point of view yet. I mean, I would say earlier in the year, there were definitely parts of the world that, you know, like slowed down, froze up. But that was relatively short-lived, and we don't think it's going to have any material impact on our growth over the next 2 or 3 years.
So you're not seeing a slump anywhere?
We're not seeing a slump. I'll tell you what we did see, and we talked about it in our first quarter. January and February were really strong. March, April, we definitely saw a step back as we, had tariff discussions and the like. I think it made everybody nervous, and I sort of said when the ground is moving under your feet, people tend to freeze up a little bit, and that's what we saw. But as we've gotten deeper into the second quarter, we haven't seen that continue. We've seen it sort of stabilize, and it was on a trajectory for us to show positive growth on a same-store basis this year. My own belief, and I've said this a number of times, you see it in what's happened in the market. I think the markets were sort of overweighted to the downside. I think there's a lot going on, but, some of the tariff things are getting sorted out, and I expect this summer we're going to see a lot more of that happen. I think the markets are more equally weighted right now, as you see, over the last, 4 to 6 weeks. And what we're seeing in our business is similar. Like you've seen an early reaction sort of in March and April, which was a bit of a step back, still positive, but a bit of a step back.
It's come back.
And as we've gotten into May and hopefully June in the summer, it's sort of stabilized. And my own view is that there's an opportunity in the second half of the year to see an uptick that would be more like what we saw at the end of last year and the beginning of this year. And I think that occurs if people just get more comfortable that they have a little bit more visibility, a little bit more certainty. Some of the trade deals get knocked out, the big legislative package gets done this summer. I'm not saying necessarily all those things are going to happen, but I think there's a reasonable chance that those things are going to happen. And I think as they do, that sort of greater stability in the broader macro environment is going to translate into more confidence of consumers, whether it be business or leisure, to travel.
Right.
And so I think the second half of the year, we have an opportunity to sort of get back a little bit more to where we were pre-liberation.
Right. That's